Let me give you guys some context. Electrification in Africa, or energy generation in Africa, energy generation, not electrification, is the U.S. is 5.5 times more than the whole continent of Africa. Just the U.S. alone, generation capacity is 5.5 times more than all of Africa combined. So that gives you an idea of scale and the problem. And the problem set and where we're going is that there's 800 million people globally now who don't have any energy. 14 years ago, that number was 1.2 billion. 600 million of them were in Africa, right? So today, the research came out last year, and it's down to 800 million around the world who are now don't have any electricity at all. Not affordable power, but no electricity, right? 600 million of them are still in Africa, right? So whatever people have been doing in Africa for electrification is not working, right? And we think that the answer to that is mini grids, and the way to do that is Bitcoin mining paired with new energy generation.
Which, I mean, clearly it seems to, you're already, this is a testament to it working at this scale.
Yeah, I mean, we've proven, like, if there's anything that we can take away from the gridless experiment over the last 2.5 years, is that we can make off-grid energy profitable, right? That is no longer, that's not, there's no contestation of our data. That is what's worked.
Is the profit potential such that it would incentivize building new plants, or is it only to sort of fill in the capacity that was built that was subsidized?
Yeah, no, it actually is. This is the crazy thing to me. A year and a half ago, I wrote my own paper after like reading these other documents, saying, "Oh, okay. The problem is it hasn't made sense to build energy in these places because it's not a good investment." But now it is, right? And here's the numbers to show you that you can get a return in 5 to 7 years, right? Not up here. I can show you the spreadsheet later. And I published that, and then nobody started doing it. And so we were looking around. It's like, why is nobody doing this, right? And then we have some pretty good investors, right? Like smart guys, smarter than us, and at least much better financially and with Bitcoin. And so they were sitting down with us and saying, why don't you finance this with Bitcoin? Could Bitcoin itself finance new energy? And we're like, what are you talking about? So let me give you some real numbers. So $2 million will build you 1 megawatt of hydro, run-of-river hydro, like this, okay? So that, so for every $2 million you spend, you'll get 1 megawatt. So if I raise $20 million, I can build 10 megawatts of energy. I can get a 5 to 7 year ROI on that. That's good. That's better by double than any other off-grid energy investment in Africa, period, today, right? But they said, well, if you take that same $20 million and turn it into Bitcoin, what could you do? I'm like, what do you mean, what could I do? They said, like banks will lend you money against your Bitcoin. So if I can use that as collateral, what happens? So we got in touch with a Swiss bank, and sure enough, in August or summer of last year, they changed the rules in Switzerland, which allows them to use Bitcoin as collateral. And they'll give 50% LTV with a 9% interest rate.
And just do a little quick math here, call it 5 to 7 years. So let's just call it 6-year ROI. That translates to a return of principal, I should say. That translates to something like a 16-17% IRR. So well in excess of the cost of capital there. But and the beautiful thing about that is you can keep on, as Bitcoin appreciates, you can obviously with prudence borrow against more and more, expand more and more, and then when you pay back the loan, you can keep recycling that same capital.
Yeah, that's right. So all of a sudden we can draw down against the Bitcoin. This is important for Africa. Is whenever you hear about Africa, you have a red flag that goes up in your head, right? So everybody does. But if I have Bitcoin as collateral, I don't have geographic risk on that Bitcoin, right? And so all of a sudden I get non-Africa risk-adjusted capital, right? And I can put that to work in Africa. And I can go build out these new energy sites and build Bitcoin mining with them. There's an important component that I don't think most people in Bitcoin know, which is this: how much do you think that we earn as Bitcoin miners per kilowatt hour that we burn?
Depends on your ASIC.
We have the foremost public mining company stock analyst on X.com.
Is this Penny?
But we don't dox. We don't
PubKey
dox.
crowd shows up.
But we do have the best one, and I've heard that name before. But
So our data shows that it's like it sits around 7 to 10, 6 to 11 cents per kilowatt hour, right? And I can share that spreadsheet as well, right? And the interesting thing about that is that that's a global number, right? So if I'm sitting in a rural village in Africa and I can make 6 to 10 cents per kilowatt hour or whatever, let's call it 10 cents, let's call it the higher number, and somebody is willing to pay me 12 cents for that energy, what I've really basically done is set the Bitcoin network has set the market maker for the price of energy. It's the price floor now, right? And so if I used to pay 36 cents per kilowatt and I can pay 12 or 15 cents, that's a great deal for me. It's also a hell of a lot better for me if I'm vertically integrated, owning the energy as well as owning the mining, because I'll sell that to you rather than make more Bitcoin, because I can just buy Bitcoin with that money you give me anyway, right? So it's a really interesting like byproduct of the model is that you actually increase the likelihood of people being electrified with affordable electricity, not just have it near them.
And in addition to being like a really interesting business that obviously has humanitarian benefit, though again that humanitarian word's often like thrown around a lot for projects that aren't making like tangible impacts on people's lives. But from a Bitcoin mining first point of view, there's this weird dynamic in Bitcoin mining where it's commodity production, which people talk about commodity production businesses not being good businesses, but it's also the worst kind of commodity production where anyone in the world can plug in an ASIC. There's no moat, there's no natural resource that you can like secure rights to. It's not like a cobalt mine where there's only X of that size in the world. And so as everyone's plugging in ASICs, you see all these kind of perverse incentives, whether it's folks who are maybe mining Bitcoin to get outside of capital controls, or publicly traded mining companies that are happy to lose money just so they can keep announcing growth, or if you have, say, certain governments or kingdoms in various parts of the world that are basically appropriating power from the private sector so that they can, make money themselves. It's this really competitive business, but I think this is a great example of what the future of Bitcoin mining is going to be, which is Bitcoin mining as sort of an auxiliary revenue stream to another business model, right? So we've already seen that with the likes of Riot down in Texas, where their Rockdale site is really more of like a power trading instrument than it is a Bitcoin mine. They have the right to a large amount of power. At any moment, they can either mine Bitcoin with that or they can sell that power back to the grid. I think Stronghold is another example of actually on this power generation side where they're taking this waste coal refuse, which is obviously has all these toxic side effects into the local water tables and things like that. They're burning that. They're creating energy. They can either sell that energy to the grid or they can mine Bitcoin. And I think this is another really interesting example where this way you're speaking about the business now, where you're owning the generation too, you're really in the business of developing, power infrastructure in these communities that would otherwise be off the grid. And with Bitcoin mining, you basically have this buyer of first resort, and you have this anchor tenant, and it sort of de-risks you because even afterwards, you can sort of load balance as needed, to the extent you have excess energy. And so I think this is what's really interesting because this is like what the future of Bitcoin mining will be. It won't just be pubcos in the U.S. Building big data centers where they just like mine Bitcoin all day and then they sponsor conferences and do Twitter Spaces talking about the importance of their company and all this stuff. Like the real future is Bitcoin mining is this load bank, and I think the real future is going to be having these auxiliary use cases for this Bitcoin mining tool as opposed to having Bitcoin mining be the end in itself.
I mean, that's what we built our business off of. The idea that we thought we were just going to be Bitcoin mining, and then we learned that we were kind of at least energy adjacent, and then being energy adjacent, we realized that there's this like I was talking to you guys earlier about this. There's this moment in time where there's this arbitrage on being a Bitcoin miner that allows you to be a part of the like base commodity for the world, which is energy. I can leverage my Bitcoin mining to become an owner of energy, and that's incredibly useful long term, right? And so this is the way we see it at Gridless. Is this is our opportunity? We're in this part of the world that is like this blue ocean need for energy, and will for decades to come. How can we become a part of that story? And Bitcoin mining is the engine that powers it, rather than being the end all be all of the business.
It's the always has been meme. It's all about energy. Always has been.
So true,
It just
King.
converges. Yes.